Gold prices ended the week on a very bullish note, matching the Feb 1 weekly close above 1320. And really, you got to go back all the way to June of 2018, the last time we had a weekly settlement above 1320. So it's really, the gold market's really made a big decline heading into the second half of 2018 and has really rallied very strongly. Really just since November of last year, and we continue to see that bullish trend continue. So right now the market just seems very much in tune with the trend is your friend. Certainly gold can move very quickly on any news that comes out, but certainly one of the things that we're watching here is the periphery, which is a lot of the risks associated with maybe something overseas, trade talks with China and the US. You've got a lot of different variables out there which are pushing gold prices higher. A little bit of fear creeping in there as well. So that all is kind of keeping things in step. And right now, gold prices just look very bullish as we head into the weekend. And if you look at what the dollar is doing to gold, dollar goes higher, gold goes lower. Well, we haven't seen that relationship here for quite some time. And the dollar is actually very strong this week as well. So you had a strong dollar amid strong gold prices and higher gold prices. And if you look at where gold is now, look where the dollar index is trading now, the last time it was this high, gold prices were about $70 lower, so an ounce. So that's a big move we've seen with gold and the dollar both outperforming here, both looking very bullish for really the same reason, but are trading independently of the old ways, we'll call it. And I don't seem to think that the dollar trade will affect gold prices at this point. Even if dollar keeps going higher, I do suspect that gold will keep doing the same, at least until we get through some of these issues. The China trade talks, as I mentioned before, Brexit coming up at the end of March. Likewise, weakness in the global economy led by Europe and possibly seeing some cracks in the dam here in the States. So there are some reasons why gold could be going higher, as well as Fed policy remaining on hold or possibly turning into much more dovish than was previously thought. That will all keep gold prices very well bid. And let's go down to positioning, something that has been missing in our commentary really since the shutdown. The positioning numbers from the CFTC are still lagging, but we do have them as of January 15th. And as of January 15th, longs were exiting big time with both hands. So it was just before we hit the 1300 mark. Obviously, don't forget we had that big day on January 25th where we had the China trade deal started looking shaky and things started kind of going sideways, and gold really made a big move on that day. That was the day that things really shot up, and that was the day that we really haven't looked back since. So right now, gold prices, the positioners look to have gotten out just ahead of that move, and maybe were part of the reason why we made such a big move on Jan 25th to push us higher. We won't know that until we get that data. They are doing their best to catch up. We suspect they'll be caught up in the next few weeks or so. But right now, positioners the specs look to be long. I do suspect that we'll continue to see higher gold prices regardless of the dollar. And look, 1350 seemed like a pipe dream not too long ago. That was our level we picked for Brexit, kind of where we thought we'd see gold prices go ahead of Brexit. After Brexit, it's really anybody's guess as to how this thing works itself out. I think gold remains in favor at least until the dust settles, and that could take longer than after March 29th. So right now, heading into the weekend, gold price is looking very bullish as the trend is your friend.